Breaking update from Iraq's currency markets. The US dollar is slowly creeping higher against the dinar, with today's trading showing $1 at about 1,298 dinars. That's stronger than the 7-day low, which had the rate closer to 1,310 per dollar. For many watching the markets, this shift might look small, just a dozen dinars difference. But in a country where import prices, fuel costs, and daily essentials are closely tied to the dollar, even this narrow swing has an impact. In Baghdad's exchange markets, traders are noting a cautious optimism. Buyers are finding the dollar slightly more expensive than last week, but the drop below 1,300 marks an important psychological level. Herbal, too, is mirroring the trend, with rates converging around the same figures. So what's driving the move? Analysts point to a combination of factors. Steady oil revenues supporting dollar inflows, central bank interventions to smooth volatility, and seasonal demand shifts that temporarily ease pressure on the local currency. Still, the long-term question remains: can Iraq maintain stability at or below the 1,300 mark, or will renewed pressure from imports, black market demand, and U.S. financial policies push the dinar weaker again? For now, the headline is this: 1,298 dinars per dollar. A modest gain, but enough to mark the strongest point in more than a week. Traders and households alike will be watching closely to see whether this becomes the start of a sustained recovery, or just another brief pause in the dinar's ongoing struggle against the dollar. Now that we've shared the headline update, let's go deeper into what this small but meaningful shift actually means. At first glance, the move from 1,310 to 1,298 seems minor, a difference of just 12 dinars per dollar. For a household exchanging $100, the change amounts to about 1,200 dinars, or less than a single US dollar's worth. But in Iraq's fragile, dollar-dependent economy, such swings can carry outsized significance. To understand why, we need to unpack the forces at play behind this appreciation of the dinar. One of the main drivers is oil revenue stability. Iraq, as OPEC's second-largest producer, earns the majority of its income in dollars through crude oil sales. These petrodollars flow into government accounts and are later converted into dinars for salaries, subsidies, and public spending. When oil markets are stable, as they have been in the past 2 weeks with Brent prices hovering in the mid-$80 range, Iraq's central bank enjoys stronger reserves and greater ability to defend the currency. But oil alone doesn't tell the whole story. The Central Bank of Iraq, CBI, has also been quietly stepping up its interventions. Currency auctions, where dollars are sold to local banks and exchange companies, have seen tighter monitoring. U.S. pressure on compliance, particularly regarding money transfers to Iran and Syria, has forced Baghdad to clean up loopholes. As a result, dollars are entering the legal market in a more controlled manner, allowing the CBI to keep the rate below the 1,300 mark for now. Then there's seasonal demand. During certain months, demand for dollars spikes, such as during the Hajj season, university enrollment periods abroad, or high-import months before Ramadan. But this week, demand has cooled slightly. Traders report that importers already purchased their bulk shipments earlier in the month, leaving fewer buyers chasing scarce dollars today. That easing of pressure has allowed the dinar to regain some ground. Of course, we can't ignore the black market factor. While the official central bank rate remains firmly at 1,310 IQD per dollar, street prices have fluctuated between 1,315 and 1,325 in Baghdad and Erbil. But in the past 2 days, these spreads have narrowed closer to 1,300, indicating confidence that the dinar can hold. The psychological importance of crossing back below the 1,300 line shouldn't be underestimated. It gives ordinary Iraqis a sense that their money has regained a bit of strength. Yet, the deeper question is whether this trend is sustainable. Iraq's economy is still burdened by structural weaknesses. Over-reliance on oil, political uncertainty, corruption, and heavy dependence on imports. Every refrigerator, car part, medicine, and electronic device entering Iraq comes through trade routes priced in dollars. So even if today's rate looks favorable, the underlying vulnerability remains. Analysts caution that a stronger dinar in the short term may mask longer-term inflation risks. If dollar demand surges again, especially in the black market, the CBI will be forced to release more reserves to defend the peg. But with U.S. scrutiny tightening, Iraq has less freedom to pump unlimited dollars into the system. That could eventually widen the gap between the official and unofficial rates again. There's also the regional dimension. In Erbil, traders often move dollars across borders into Turkey and Iran. In Basra, ports see inflows and outflows that don't always align with Baghdad's financial policies. These parallel markets mean that the dinar's strength is never uniform across the country. A citizen in Baghdad may see 1,298 today, while a businessman in Erbil might still be paying closer to 1,305. This unevenness continues to erode trust in the system. And then, of course, there's the elephant in the room. Speculation about revaluation. Some voices, particularly among foreign investors who've long followed Iraq's currency story, interpret every sign of dinar strengthening as a prelude to bigger moves. They argue that cutting cash supply, narrowing street spreads, and reinforcing dollar auctions could be laying the groundwork for a future revaluation. Others are far more skeptical, pointing out that Iraq lacks the structural reforms, such as diversification of its economy, stronger banking networks, and transparent monetary policy, needed for such a dramatic shift. For the average Iraqi citizen, however, these debates are less about macroeconomics and more about survival. A shopkeeper in Baghdad notices whether rice, sugar, and cooking oil rise in price. A taxi driver feels the cost of gasoline. A student applying to a university abroad worries about whether the tuition paid in dollars will cost more or less next month. For them, today's shift to 1,298 offers a small relief, but it doesn't erase the anxiety about tomorrow. To put it simply, the dollar creeping down is welcome news, but it's not a full victory. The dinar's stability remains fragile, constantly tested by global oil trends, local political disputes, and the flow of dollars in and out of the country. So, while today we can say the dinar is holding firmer than it has all week, the real story is about whether Iraq can sustain that strength, or if this moment is just another brief calm before the next wave of volatility hits.